Hey, Carley, thanks for being with us on Stock Shotz tonight.
No problem. Thanks for having me.
Carley, it's Sunday night, March the 1st. Tomorrow, no doubt, will be a volatile day. What are you looking for?
To be honest, I mean, we've kind of, we're trying not to make too many bold predictions in this market. Obviously, it's been very volatile and questionable. Here's what we're looking for. We're thinking that the S&P we're setting up for some sort of a major bottom. Now, when I say major bottom, it may be something that lasts 2 to 5 days. It may be something that lasts a month. But I think it's going to be pretty dramatic. With that said, I think we're going down before we go up. We're looking for about 712 in the S&P futures, the March S&P, and possibly even around the 700 mark. And from there, our strategy going into the day is possibly selling puts against it, or maybe some sort of a 1-by-2 ratio put spread, in which we can take advantage of the implied volatilities and just kind of the panic that's going on in the marketplace. So, assuming we're right, in the 700 area holds in the S&P, we think we could get a pretty sizable bounce, possibly up into the high 790s, maybe even 800 range.
That would be a good bounce.
It would be.
Now, you mentioned the panic, and I think that's kind of been the operative word for the street here lately, and I know you talked to a lot of floor brokers during the day. Mm-hmm. Tell me how bad the bank news and the potential nationalization is weighing on the markets.
It's really obvious. Anytime, any new headline that comes across, the market just, there it goes, rolling over, and it's just kind of a never-ending, spew of bad news and, negative market sentiment. And, I think it's, let's face it, the bears have been rewarded. Every little rally, the bears are jumping in and selling, and until that mentality changes, we're not going to get anything sustainable on the upside. The only thing I can say about this market is you kind of have to look away from fundamentals, or at least that's my opinion. I mean, we all know the bad news is out there. We all know how horrific things are, and I think everyone's just kind of depressed, and so we've gone beyond, there's price earnings don't really matter anymore. The economic news is bad, but we know that. So there's no surprises. It's just a matter of getting people, the emotion back into the market. And the only thing that I can think of that will change things is, something coming out of Washington, some sort of confirmation, wipe away the uncertainty. We know that things aren't going to turn around on a dime, but if we can get some optimism flowing out, I think the market might look at it a little favorably.
One of the things that I've been arguing on the show for quite some time is the fact that when we have to look to Washington for any potential good news to move the markets, we're really, really in trouble. And you make a great point that the fundamentals are gone, at least if you look at my book, because I started as a fundamental guy, and it's just been, I think we're in a scenario now from an equity standpoint. I don't know that we can even calculate the price earnings because the economy's been so dismal, we don't know what the earnings are going to be. I do want to ask you about treasuries. A lot of the talking heads on TV have been saying there's a treasury bubble, and I concur. But it really hasn't burst as quick as a lot have predicted. Can you shed some insight as to what you're looking at with regard to the treasuries?
Definitely. I mean, back in December when the Treasury market topped out, everybody knew it. Everyone knew that the floor was going to be taken from underneath the market, and eventually it happened. The problem is, at that point, the bears that were worn out, and I can almost bet you that a lot of the bears didn't participate in the down move simply because they'd been, blown out, they ran out of money, they ran out of margin, or whatever the case is. So is there a bubble in treasuries on a long-term basis? I think you're right. I think the answer is yes. With that said, it's not going to be, it's not going to be the down sweep that everyone's looking for. I think we've already seen that. I think from here we're actually poised to go a little bit higher simply because the thing that cracked the back of the Treasury market was supply. The government is, they're selling bonds left and right, bonds and notes, and that's been weighing on the market. But at this point, we already know that this is baked into the cake. We know this is the problem. This is happening. So from here on out, people are going to start to look at the economic data, which is negative, and the flight to quality, which we have seen over the last, little while somewhat, in that treasuries have stabilized. But I think that we have some room to move on the upside before we finally get the selling that everybody's looking for. In fact, seasonally, the treasuries go higher for, now until like the middle of March. So although fundamentally I'm bearish at these levels, I wouldn't sell into this market. In fact, I'd give it some room to move on the upside. Probably going to get a much better chance to sell it, sometime in March, I would say.
Well, one of the things that I've been looking at is that at some point the flight to quality goes away because the government has just printed so much money. And I'll be honest now, I've been wrong. I really anticipated that the dollar would have already started a pretty rapid decline by this point, and it's actually gone in the opposite direction. But at some point, from what I'm looking at, with printing all of this money and running deficits that begin with a T, it seems like that flight to quality is going to slip out from under us. Now, do you think that this is going to hamper the dollar over the long run?
I do. I think eventually it will. The thing about the currencies recently has been, it's like, fundamentally they're all in negative situations, but it's like, which one's worse is the problem. And, the dollar maybe is a little less worse than some of the others, and and that's kind of been fueling the fire. But eventually, the massive capital injections that are coming into the marketplace, they're going to have its toll. Will it be in 2009? I'm not sure. It might be, a little later in beginning, middle 2010, but inflation's going to have to come into play, and eventually, the dollar's going to have to pay, and so will treasuries.
Now, from what you hear, is there really this huge, these vast resources sitting on the sidelines waiting to come into equities, or has the mindset of the home investor, the guy who's watched his 401k just disappear, has that mentality changed for quite some time?
That's a great question, and honestly, I think I think everybody's mindset has changed. I mean, even the people that have been doing this for a long, long time and have been very successful buy and hold investors are kind of questioning the theory. Maybe everything that we've learned up to this point is no longer valid, and so the average investor, the investor that may or may not be necessarily up to speed with some of the things that you and I might be, I think they might be close to throwing in the towel. There is a lot of money on the sidelines, but whether it makes its way to equities here anytime soon seems to be rather questionable. I'm not sure it's going to happen. I think, I don't think we're going to see a V bottom. I think it's going to be, a long time coming until we can recoup some of these losses. So I think it's going to take a long time to lure money back in.
I think it is too, and I think so many people have been burned with a buy and hold mentality. When this correction first started, I heard a lot of people say now's the time to double up. And based on what they had seen over the past 10 years as investors rather than traders, they were making a pretty decent assumption. But this time it seemed to be different. And I'm very scared that we're headed much, much lower over the long haul because I just don't see anything to turn this economy around.
Right.
Let me ask you this. Mm-hmm. How much volatility, let's say that you took a new client in, would you recommend more hedges today for a client than you would have recommended 18 months ago? And does that kind of mindset of trying to hedge everything that you do, is that going to cause more volatility with some of the options and such?
For the rest of this video, please visit our website at www.stockshotz.tv. That's www.stockshotz.tv. Thank you for listening.